The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, on this first day of the week, Monday the 18th of July. My pleasure to be here Monday through Friday, and we've got a Dow that's moved up 36 points at 18,553. You've got, let me just move this away for 1 second. I'll keep it there so I do remember it. Oops. I guess I have to move it. All right. So the Dow is up 34 at 18,551. The S&P is up 5 at 2167. You got the comp index up 29 to 50.59. You have got, UK is up 35 to 67.05. That's very interesting. Nice move. Of course, Friday, just after the bell, there was that Turkish news about the coup, and the market dropped 69 points in the Dow. The S&P dropped, I think it was 12 points, just whoops, like that. And then Sunday night, everything was just fine. Nothing to see here, folks. Just move along, and the market went right back. And now we're back up. We haven't taken out the highs in most of the indexes except the QQQs. So we've got the comp index up 29 at 59.4. And you've got gold. This is very interesting. Gold's up too. It was up a lot. It was up like 12 on Friday. Now it's come back a bit. It's only up 2.5 at 13.29. Silver's down 11 cents at 20.05. And high-grade copper is at 2.24, up 1.1. Crude oil is down 1 at 44.91. That's so interesting that for the last 2 days, crude oil has been weak and the market has managed to stabilize. It hasn't really soared to the upside, but it's held very nicely. The bonds are down 6 ticks at 171 15.30 seconds. And you've got the dollar. I think the dollar, when I last looked at it, let me just check, was up, and it's up again. Yep, it's up. No, it's now down 0.01 at 96.54. So there are a bunch of things that I'd like to look at here. This is the 10-minute E-mini futures with Chapman Wave notation. Here's that spike after the bell on Friday. Whoops, right down to 2143.25 in the E-mini. It rallies back again Sunday evening, goes all the way back. The previous high was 2166 point something or other, 2164.75. It rallies on Sunday night to 2160.75, pulls back, has a digestive phase. See this gray line right here? It's like a key support level. It's like a fulcrum. It's the midpoint of any big move to the downside. You'll see that this becomes a measured move, and that would say that 2162 to around about 2157. So there's 7 points. You can expect 7 points down when and if peak B is made in the indices. Now this is very interesting. You see this dashed Chapman Wave inside wedge target line. Look how the resistance has just been met there. So we haven't broken above 2163.25. If there's a push above 2163.25 to 2163.50 in the 10-minute E-mini, you can expect that it's going to go peak A, B, C, D, and that D will be somewhere in the range between 2163, probably 50, and 2165. And that should be very strong resistance, but a good move nevertheless in this what should have been a fairly weak session. I think it's not a fairly weak session, only in the sense that there was a correction. It was an overnight correction. You didn't even know it. It just happened. It fulfilled all the requirements that I would have liked for a pullback. I've been expecting for my subscribers to my opening call that there would be a pullback, and that pullback would take you to about 100 and maybe 40 points, 150 points down, maximum, maybe 120 only, 80 to 120, and then we start on the way to a leg B. So on the downside, 2158 on this E-mini contract will be really important. A close below that says, okay, now you're going to get the timeout. But look at the move in the E-mini weekly chart. This is a continuous contract which has exactly the same price as the E-mini as it stands right now. So we're looking at 261.25. It's in the Chapman Wave inside track repellent zone. So if there is a move this week at any point, oops, I didn't mean to touch that. If there is a push into the 2190s, that's going to be really strong action. So in the meantime, we've got to expect that this is going to offer quite a bit of resistance in the short to near term. Okay, now let's go on. So we haven't made a peak B. That starts at 2168.25. We'll see what happens. Now I want to do this. I want to just mention one of our denners. He has been with us for a little while. GG, Goofy Golfer, he nicknamed himself Bob, is in the ICU. I believe it's down in Florida. And he's evidently starting to improve. But I just wanted to send white lightning to Bob. And I just wanted to say, Bob, yeah, we really hope that you recover very quickly and you're back on your feet and just back to normal again very, very soon. And we do miss you. And Goofy is the one that gave us the expression, don't catch the knife unless you've got Goofy Golfer's special metallic gloves. And a falling knife is a very dangerous thing to try to catch, and that's what happens when markets go down sharply. So thank you for that expression. So, yep, white light to you, and in the den, a lot of people are wishing you white light and speedy recovery. And refuah shalamah. All right, good. I like that as well. All right, let's go on to what we're looking at. Yeah, I do want to thank our hosts from early in the morning, starting off with John Logan, and then you get Larry Pesavento, and you got Tom and Tommy, and you've got Daryl, and I come in at 11 o'clock. Straight after that, you've got your swimming lesson with Think or Swim, a great show and options, absolutely fabulous show. And then, of course, you've got Steve Rose, you've got Dave White, and you've got Tom O'Brien back again on this Monday. So I'm expecting that there's going to be limited upside right now, and that we're about to make, if we aren't doing it already, let me just double check, INDU. If we aren't doing it already, the 18,557 high, excuse me, on Friday, the high so far today is 18,556, a point away. I suspect that we're about to make either today or tomorrow a leg B that goes to a peak B, meaning that there'll be a higher low bar. Let's see the S&P. I think the SPY's already done it. So, yep, the S&P needs to break 1 penny above 2169.05, and that'll continue leg B. But if it pulls back from here, it'll make peak B. And the way it's acting, it should be just a mild pullback from 2167, I would say, to the 2155, 2153 area maybe. I don't know if it'll touch the 9-period moving average in this pullback of 2142. Now remember, my theory has always been that, let me just go to this right here. My theory has always been that in the context of the markets, oh, of course I got rid of it, huh? I was going to show it and now I got rid of it. Within the context of the markets, bad news is what creates down moves. And it's a response to any news that is responded badly, negatively, is bad news. And until we get that, you can expect that the market kind of has a drifting up mentality. That's number one. Number two is, I forgot to mention for my subscribers, all the work I did over the weekend, I can't believe that it missed my eye. The Chapman Wave trend gauge flashed a signal to say that there should be a Dow rug slide early in the morning, and there was. So thank goodness. It missed twice in the last week and a half. That's the first time it's had misses in about 2 years. So congratulations on the trend gauge working again. I'll be back. Guys, up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, had a question about MLNX, Mellanox Technologies. Sounds like a biotech, but it's not. If it's a technologies, I don't know what they do, but whatever they do, the chart is improving a lot. Not great, but it's improving. The monthly chart has made a peak D and is really trying to recycle from 51.54 where it is right now, 89 cents. It's the weekly chart that says to me the rally after making that peak E high at 55.80 back in the week of the 25th of March, and very sharp pullback. You can imagine going from the 55s down to the 41s, 40.54 in fact, in May, the week of the 6th. The fact that it's gone over a 50% retracement, it's actually more like 66%. I like that, and it's in a leg B. I should call it a gray leg B. I'll just change the color right now to show what I mean. And that says the MACD and stochastic are rallying. I think it's got tremendous support if you're looking intermediate term in the 48s. But I suspect that this move, by the end of the week, you could see it testing as at 51.53, made a high of 51.98. I think 52.50 to 53.50. I'd say that that's about ABC. It should have a pullback. Yeah, somewhere in the 52.80 to 53.60s, I think, would be the strong resistance, at least for this move up. And then it might need a little bit more rest period, trying to test if we can get to the 53s, coming back to the 50.20, 49.20 area, and that's going to be the big test. Is how does it handle the next 2 weeks if there is some kind of a correction, which I'm thinking there will be. Okay, so that's MLNX, Mellanox, and it sounds like something you take for indigestion. All right. Let's go on, and with questions, good questions coming up. The SOX index, SMH. Now, one of the things that I've done for my subscribers this week is I didn't want to add anything new unless it was a stock that has the chance of moving very quickly to the upside this week. Now, within that context, I didn't even want to add to some of our positions that we've got some really nice gains in. I wanted to, because they've acted well, I wanted to buy them on a pullback. I think I'm going to have patience to wait 2 weeks to see how we conclude this week with possibly a peak D in the Chapman Wave daily charts. And then when we get to next week, that's really the issue, right? So now what I've got is a peak F was made in SMH's, the SOX index at 61.46. sorry, on the 23rd of June at 58.55. It pulls back very sharply to the 200-period moving average. We were, in fact, going to buy, not the SMHs, but the 2 or 3 times long position. Instead, we went elsewhere. And those have given us equivalent gains, really good gains. So I'm looking at this and I'm saying I'm a little upset because I think that it is an area that is economically sensitive, that is very important. I suspect a lot better things are happening in the economy that's being spoken of. That's what I've spoken about quite a few times now over the last month or so. And this ETF has gone to a new recovery high. That's a recovery high. And that's above the June high of 60.13 that was made last year in a cup formation. And in a cup formation, the Chapman Wave cup and ladle, that's what this is right now, a close above 60 would suggest very strongly that it's going to go to a leg D before it comes back to retest the lip. And that's going to be very important. All-time high was 100.20. It was made just, I think, a month or two before the all-time high back in June of 2000. This is the high of 100.20. Let me just check that out. SOX. There we go. SOX. That's the C. I don't think I've notated it for a while. Yep, that high was made, yeah, June. Okay, same thing. 1280.84 was the all-time high. And it did pull back a little. It pulled back from the 1200 area down to 167. I'd say that's a pullback. All right. Now, so SMHs, where are we? Let me go back. SMH is trading right now at 61.44 up $1.73. That's really strong. So I'm looking at this and I'm saying, okay, leg C in the Chapman Wave, a gap up, nice. Leg E, I'm going to call it for now, leg E in the weekly chart and leg C in the monthly. Let me just make a notation here. The daily chart is very close to some kind of a deeper pullback, but the way it's acting right now, it says that 57.60, the 9-period moving average in the weekly chart, should be very strong support, and maybe it can go to 55 if the market just really takes a dive in the next week or two. Not this week, but maybe next week. So in the meantime, it's acting very well, and I continue to be a little upset that I didn't dive in and just grab it when I said we should. So that's the SMH, is very good. The daily is in a buy mode, going to a D. The weekly is already in leg E in a buy mode, and it's getting a little bit toppy. We don't have an indication yet that it's pulling back, but it's getting close. And Intel, which is a question that goes with that, is in leg E/B, and this is going to be very important. Technically, I should have put the down arrow right here, right there, and I should have put the up arrow here and said, okay, this is definitely the start of a new move up. It is so powerful. On the other hand, we're in leg D in the weekly, and it hasn't, maybe today it is, no, it hasn't taken out the all-time high of, 35.59 is the high in January. The all-time high is 37.90. I think it's going to the all-time high, and that's going to be a clue for us. And that's another reason why I think that there's a really good chance that this market in 2016 is going to go to higher highs, regardless of how deep any correction comes in when the weekly charts are done. And the weekly charts are all looking like they're very close to some kind of a pullback, I'm calling it, not a major decline. 12, 11, 8%, 10, 11%, maybe it's a possibility, I don't know yet. So that's that. Next question was Goldman Sachs. Remember, Goldman was the one that I said has the potential to move up. It's a financial, it is not a bank. I like it because of that. We didn't buy it because I chose not to go for the very high-priced stocks. We've gone for low-priced stocks because we want some percentage performance, which is what we're getting, and they're good stocks in any case. So that's my position right now. There was a test with a lower low in the H pattern of the weekly chart. Remember, this is the one that can turn out to be really positive, and I've got a target of between 166 and 170 for Goldman. I'm not sure it's in this move, but this is still a very strong move. Very strong daily resistance between 163.19 and 165. High today is 163.48. So we're getting there. So that was the question on Goldman. Please look at MA, which is MasterCard. MasterCard is acting okay. You know, this is very interesting. Look, American Express, MasterCard, Visa, with a Visa possibly being the better one. It wasn't early. Remember, MasterCard was the leader. Then Visa took over. Visa's still very, very strong out of all of them. I like Visa the best. Would I buy it? I'd rather. I've got a Chapman Wave squash pattern in the MACD and the stochastic. I suspect that this is leg B. It's going to go to a C and a D, going from 78.58 in Visa up 28 cents now to maybe the 79.80 to the 80.30 area. I'm not sure it's going to take out the high of 81.71 that was made in the 8th of June, the high of peak D. But I think that the other stocks, as I say, would prefer to be dealing with something like a Goldman Sachs. Trading, it's a double the price at 163, but you only need to buy half of those. I like this. It's a much better pattern, but it's still just, I have to consider it is a bounce within the context of the monthly still needing a lot of work. I'll be back. Dow's up 30, S&P's at 80, S&P's up 530. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So let me just have a look here at the 1-minute chart that I was doing. No, that's the 500. Wow, that looks very strong. Where is it? Where is it? Come on. Not there, not there, not there, not there, but not there. It's there somewhere. All right. Well, I'm not going to waste time. 300 minutes. 600. Okay. Yep. Is that it? No, that's not it. All right. So that's that, and I will just find it. Yeah, I wanted to show you the 5-minute chart with the What is this sneezing all of a sudden in the show? Three days in a row. All right, we've got the ESU turned down, had a lot of resistance in the 261.30 area, and thank you. And 2158.97 is now the support in the 5-minute chart based on the Chapman Wave notation of the little mouse inflection there, and it's just about to take that out. Okay, so we're looking at this, and I still think, looking at all the different charts, let me show you the IWM. Look, IWM over there. IWM is trading at 119.96. It was unable this morning to get a little higher above 120.42 for leg C, but all of these charts are suggesting, but in the weekly charts, everything, that there's a lot of strength, but on a very short-term basis, we're a little bit overbought. That's what I'm going to say. So, so now let's go back to, we were looking at XLF was a question. The XLF holding okay, leg B, made a peak B. I think it's going to try just a little briefly. It's going to pop up over the Chapman Wave inside track resistance. It's going to get to the 2390s, maybe 2420 to go to leg D in the weekly chart above 2393 was the high the week of the 3rd of June. And then we've got to be a bit careful. So let me just put it this way. The work I did over the weekend had to do with going through hundreds of charts, literally hundreds of charts based on the Chapman Wave methodology. When I went through Investors Business Daily, this is the wrong one. I left that down. Okay, I don't have the one that I wanted right now. This is still from July the 4th. I wanted one from this. You know, funny. I get the online Investors Business Daily. I'm so used to newspapers. The actual paper that I want to peruse, go back and forth, and what do I see at a glance and all that. I know the youth of today are so used to the electronic media. I'm missing out and they missing out. I'm missing out on this speed and dexterity that they have. They're missing out on this serendipitous factor that things just pop up by eye because you're so used to seeing them and you know where to look or why. And at some point, I guess there's a bit of a compromise. Each person makes a compromise. So anyway, I'm looking at this. I'm saying, okay, XLF. Let's look at the XLE. XLE is stalling. It's made a peak D. It's struggling now. It's at 68.92. I think right now it's just having difficulty continuing the rally. My suspicion is when the market comes back again in a day or two to start going into the 18,600s in the Dow, the 2180s in the S&P, you'll see the XLE actually move quite a bit higher. Now, I just wanted to show you this as well because we tend to do that here in the show. We show you all the different techniques that we have. Look, there is the USO, which is the United States Oil Fund. It's trying to bounce here. It's giving you a little. It didn't give support to the S&P because the SPY. This is the SPY 5 minutes. I wonder if I can do this. I don't want to miss out anything. B, C, D. And then it starts again. A, B, C, D, E, F. So it makes a peak F in the 5 minute chart and it pulls back. So a lot of what I'm looking at suggests that the market's getting a little bit tired. There are some stocks that are independently trying to move higher, but basically you've lost the upside momentum, at least just for now. And I suspect we need a day or so just to, this could be part of the digestion day. So it only gives you maybe 1 day down. Then we start. Remember my rule of 136. So we're going to see what happens. Now, I do want to do this before we run out of time. There was a question. So we did that Bank of America, XLF. Oh, I had a question about the yields. So let me show you something very interesting here. This is, remember in Elliott Wave, I said this is 1, 2, 3, 4. This is probably 5, and then we're going to have a nice bounce, which is the reason why we are long yields right at this moment for my subscribers to my opening call. And what I'm looking at is it should be a nice bounce. So this bounce could actually last a couple of weeks. I shouldn't say a couple of weeks. It could actually last a month and a half, and it could be making a big H pattern. And even when we come back, we don't necessarily have to come and take out the low that was made in the yield, the 30-year of 2.102. 2.102. Can you believe that? This is something that just 2 years ago, in 2014, was in fact at 3.97. So 3.9%, and now it's 3.9, not cut in half. It was cut in half just recently when it went to 2.1, almost cut in half. That is amazing. All right. And then, see, lower yields and rally yields, even if they're just rallying a little bit, that's not a big deal. If yields really start to rocket to the upside, that's going to impact the market in a very different way, a way we haven't seen for quite a while. But even then, when I show you, look, yields can rally all the way from here to the 27 level, and they're still just within a range of a month or so. So let's look at it as what we are looking at in terms of world rates. The world around just every country is, they're not doing it on purpose, but they're vying with one another for the lowest rates. And as a result, that's a really big issue. Now, if you look at this chart that I've got right here, I never show this chart because it's just a chart from my own. It's just a chart that I like to look at, and I don't think it's a chart that's going to tell you what you want to hear. It's a chart that just tells you where you are. And this chart is saying right now that technically bonds, this is the 30-year Treasury, U.S. Treasury bond continuous contract, is starting to show weakness within the technicals. But you know what happens? Look, the weakness was right there, right there. And look what happened. It still kept going much higher. So when international currents are going in a certain direction, like the push to lower interest rates, so what you see is that the technicals have an impact. But the impact is one of maybe just in this case slowing down the rise in the bonds themselves, because the MACD is just okay. Look, that's the MACD. This is the slow stochastic. It's still only down at about 70. Actually, I haven't got that on. Let me see what it is. Format symbol. Let me just give it to you right now. Somewhere over here. So we want to go settings, style, scaling, display. Center properties. Okay. And what did I want to do? I wanted to display the MACD. So where am I going to find that? All right, I can't find it right now. I'll do it during the break. I do want to see where it is exactly. So here we go. This is it. Hey, I'll display the update. All right, so that is the red is 70.15. It's way under 80%. And here we are at almost all-time highs in the bonds. Amazing. I'll be back. Basil Chapman, Dow's up 19, S&P's up 4. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I love the fact that we got people just listening everywhere around the world, everywhere in the United States. I just got an email that says, let me just see what it says. Let me go to the top of the email. Good morning, Basil. I will give you a call, but I'm in the Blue Ridge Mountains, Hiawassee, Georgia, and cell service up here is very limited. Dropped calls. Here's what I have. Bought Met at 41.51. Very nice. Okay. That must have been just as it gapped. And current at 43.09. I'm actually at 43.31. Boy, you got your cell service is a little slow. No, stochastic is up near the top. Absolutely. It's expanding. It's at 79. It hasn't got to 80%, and the MACD is good. Concerned about the 2 candles on the 14th and 15th. 14th and 15th, those little doji candles, but it was a gap up on news. It must have been good news. I don't even know what it is. Doesn't matter, because it's acting well since then. It hasn't gone even to try to fill the gap. But most importantly, what I'd like is for you to look, Don, at the H pattern in the weekly. That's like a successful, you remember Goldman Sachs went below? This one didn't. And that's suggesting that the next rally could take you to at least the left side peak of consequences, which is at 44.48. The 200-period exponential moving average and the 200-period simple moving average is in the 44.70 area. They're actually right close. I hardly ever see this. They're right close together. They're overlapping. And this has gone to an A and a B. And in the weekly chart, and I suspect that there's a good chance that over a period of weeks, it will go higher, but I can see what you're talking about. And this is what I'm going to suggest. Today should have been a consolidation day, and it didn't. It's so far, it looks like it's going to close above the 2 doji candles. A close above dojis, as far as I'm concerned, means that the trend continues in that direction. My thinking is you should wait until it gets to at least D. Give it a few more days. Give me just a reminder on Wednesday on my show, Wednesday or Thursday, and let's look at it again. I think it's holding very well. In fact, I think that on the next pullback, if it's a weekly chart that sees the whole market pullback, that'll be the big test, because this kind of comes under financials in a way. This is MetLife Inc. Gosh, I had this all notated. I don't know what happened to that. So as I'm looking at it, I like it. I think the monthly chart is a question. Does it roll over? But at this point, it's got that H pattern, which also goes to the 44.60s. Hold on. I think it's doing well. It's acting well under these circumstances. It's up 1.71%. The general market is barely higher. You've got a good stock. It's actually, at this point, it's in a sector leader, because it itself is going, it's doing much better than the S&P. So, you have a chart. My buy-sell price still shows Met trending up, an exit point of 44.48. We're in unison there. What is your recommendation for an exit point? I'm going to, this is from the back of my RV. Oh man, that's beautiful. What a beautiful view you got. Congratulations, very nice. This is my recommendation. Try to keep a core position, have a trading stop here of 42.18. It means that you make less than you would like, but at least this is the way I'm looking at it, because I don't think it's going to be hit. By Tuesday or Wednesday, if this hasn't pulled back, you're going to reach a higher level. You could get to the 44s in leg C, and that would be really good. If that happens, then I would raise the stop on the core position a little bit higher, and your trading stop could be a 1-point trading stop. And in fact, to tell you the truth, because it's in a retracement failure mode, that's the only reason why I say trading stop. Normally, I would just say to you, hey, this really, it isn't at 80% in the stochastic. If it gets there, then I would say, I think this is going to go to a leg D. At D, that's where you want to do something. And what I would recommend is at D, you can actually take off 1/3 of your position, but it's so strong. I don't want to take off more than 1/3 of the position. So how about reminding me on Tuesday, Wednesday? Remind me on Wednesday to look at it again, and let's just do a reassessment, because I think you've got a stock that's doing very nicely. You missed it. Yeah, okay. Now, the question then about a BRK.B. So let me show you something very interesting. Berkshire Hathaway has just started leg C. It has, this is the B shares. B shares going to C. At 146.63 up 66 cents, it's like MetLife. It's just acting really well. I don't know if I would even want to mess with it. There's a stock that I was thinking I would like to own, because this is where Buffett's portfolio should be doing well in this economic environment. And I think that's what it's saying. And it's saying that it wants to go, Berkshire Hathaway wants to go to a leg C above 148.03, which is just less than 2 points, 1 3/4 points up from here. And that leg C would start leg B in the monthly chart. I must tell you, the more I did these charts, the more my monthlies were they were looking really good. I hate to say it. I know that there are huge bears out there, but 2016 could surprise everyone. I've never seen such a hated mega bull market ever. I mean, even the Reagan years, I remember them talking, the media keeps talking about, Reagan, a wonderful Reagan. They were blasting. I don't even want to repeat the stuff I used to see about the Reagans. I mean, come on. What a hypocritical media we've got. So I'm looking at this and I'm saying, and you know what's funny about this is that within the context of the media, I wonder if you could find anyone that had voted for Reagan back. And I remember saying, I was talking to friends, I said, I don't know what you guys are talking about, but if you're looking at the economy, you can't go on with this Jimmy Carter stuff. You have to have a change of presidency. Sometimes you've just got to look things in and say, you know what, I cannot listen to the media. I have to go with what other things, and you have to choose those criteria carefully and say, that's my criteria. And then you go with that criteria. But you must not constantly listen to the media, because the media, most of them are just people that read a script, and they get the script from people who think they know what you want, and therefore are going to give you the script you want. I mean, this is the way it is. I know someone who had worked for AP. One of the news source is AP these days, Associated Press. And that family never once has voted anything but Democrat. How do you think everything he does is colored? It's colored by a different bias. It's the same as if I knew him all his life and everything he was on the right, and then I'd say, you know what, that would be his bias. So it's very interesting. So all right, I got to get rid of that now out of the way. I actually wanted to talk politics tomorrow, not today. I'll do it tomorrow. Tomorrow's politics day. The politics of politics, not who you should vote for, but the politics of politics. So now let's get back to the nitty-gritties. When you are looking at different sectors, what's very important is you can have all the sectors you want. What you want to do is to look for sectors that are moving within a trend. For instance, semiconductors are doing well. IBB finally is doing very nicely. Not great, but it's doing better. It's within this arch, this cup formation, the iShares, the NASDAQ Biotech ETF. There's the H pattern. It's successful only in that it broke the 240.03 level of the week of the 12th of February of this year wasn't broken when it went to 240.30. There goes that alarm. And now, of course, I won't even be able to find my little switcher off. Oh, it doesn't matter. You know what it sounds like. It sounds like beep, 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 beep. There it goes, off. So I'm looking at the IBB, and I suspect the IBB is going to go to leg C. Is this something you want to trade? Well, I would treat it only as a trade. If you are long, then hold long, because the moment it goes above 274.81, the technicals are suggesting it's in leg C and that it should even try to go to a leg D. But I'm looking at the H pattern. I suspect if and when the IBB gets to the 280 area, it's going to probably go back to being a short. We'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 28. S&P's up 570. We'll be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, GAIA was asked about it. 788 down 12 cents. You know, I'd stay away. I'd look at it again if it's at 788 down 12 cents. If it goes to it goes into there, 740 to 730, maybe that's where it's worth looking at again. Okay. Now, another thing that a couple of, I'm getting such great questions. So would I look at, where was it now? I think I lost it. Didn't lose it. It must be there. There it is. So yeah, the shorts have increased. The CFTC data shorts have increased for 3 weeks, I believe. Is that 3 weeks? Yeah, 3 weeks. How much lower? So so it's a good question. Let's go to the USO. The USO is still down. I think it's going to go to a trough C, and that's where you got to see how much is left. Because if I can go to crude oil, that's the one that goes to. You remember that unlike the USO, the crude oil did go to. And that's the core contract, right? Went to a peak D. I'm saying to you that if crude oil, I think I said that last week, that if crude oil closes under 45.50, let's call it 45.30, 45 or 44, 44.30. It's at 45.95. That's going to suggest to me that crude oil has made an H pattern in both the weekly and potentially the monthly. And if crude oil cannot hold between 40 and 42 over the next three to 4 weeks into August, that's going to be very bad for crude oil. It's going to suggest that it goes down. And that could coincide with when I get my peak D in the Dow and the S&P weekly charts. That's really what I'm looking at. All right. Now, just one quick thing. I was asked if I would show, if I can. I hope this is the one. Yeah. So this is the 1 minute chart. I had to renotate that. F did give a pullback, but it's a 1 minute chart. So it recycled because of this instant restart right here. And it went to ABC. Whoops. ABC. Yeah. The way I did it before, I'm going to do this again. That's a red C there. It's called the Chapman Wave Phantom Peak. Yeah, what I'm looking at is rectangle formations can last a lot longer than your patience, and that's basically what we're in. So if you're looking at the charts, if you go to the 120-minute chart, let me just do this quickly. I think we're about to run out of time. Yes, we're about to run out of time. So looking at this, see a rectangle chart pattern, just think a rectangle pattern. You can stay in the rectangle pattern for a little while. And that might be the consolidation. Maybe tomorrow we don't even pull back much. We go to leg C. Well, we'll see about C tomorrow. Okay, so let's just do this. The VIX index. There were a couple of other questions I'll try to get to tomorrow. They're good questions, but they're not immediate questions. Oh, Ben. Hi, Ben. How are you?
Hey, Basil, you there?
Yes, real quick.
Hi, real quick. The trend gauge. Do you anything for tomorrow?
I don't have anything yet. I did have it, and I forgot to mention it to subscribers. I saw it, and then I completely forgot about it. It flashed for today, and we've already had the pullback. I don't have anything so far for tomorrow. I'm just thinking that based on what I'm looking at, there's a consolidation phase that's going on. It's holding really well. That's all I can say. So if you're looking at the VIX index, just keep your stop, mate. Don't get. You'll always have another chance on the VIX index. Don't hold it at this point. If you're down even just a penny or two, don't be afraid. If the market turns around later in the day, you can always buy it back. I don't want you to be stuck with a VIX that closes at the low and tomorrow gaps down because the market pops up. That's the most important
keep
thing.
in mind that looks like the Qs are just created another high, so that's still in.
That's right. So keep in mind there's still internal strength, and that's the way we're looking at it. Good. Thanks so much for calling, Ben. I hope that helped you. So, folks, this is what you want to keep in mind. The VIX is at 12.60. In the 12s, this is selling pressure on the VIX, but buying pressure on the market, even if the market's not going up. If the VIX by the end of the day goes from 12.60 to 12.85, 12.93, you will start to see a pullback that should continue into tomorrow. I'm not thinking deep pullback. I'm just thinking a breather before we go to the next leg up, because I'm anticipating that the Dow and the S&P will in fact go to peak Ds before we get some kind of a deeper pullback. Hey, have a great day. Check out my opening call. Be back tomorrow. Have a wonderful session.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.